Here's 8 ways to legally avoid and reduce your taxes. Number 1, using Form 17 and a declaration of trust. If you jointly own a property with your spouse, rental income is automatically split 50-50 for tax purposes. However, if you do the following 2 things, you can change the income split based on your household circumstances. For example, if one spouse is a higher tax rate payer and the other currently has no income, shifting rental income to the lower earner can eliminate your tax liability. So there's 2 steps to do here. The first is to get your solicitor to draw up a declaration of trust, which will set you back around £200. The second is to file that Form 17 with HMRC. Number 2, tax-free capital gains allowance. Everyone in the UK used to have an allowance of £6,000. Well, that's been kindly reduced to £3,000 as of 2024 and 2025. So if you're selling investment properties, shares, or any other assets, try and time yourselves to use this tax-free amount every single year. Number 3, maximize pension contributions via a limited company. If you own a limited company, you can pay yourself a salary and pension contributions. Employers can contribute up to 100% of their salary as tax-free pension contributions. For example, if you earn £25,000, your company can also contribute £25,000 into your pension, which essentially reduces your corporation tax and avoiding income tax on that amount. Number 4, use the rent a room scheme. If you rent out a furnished room in your house, you can earn up to £7,500 per year completely tax-free. Please note though, this doesn't apply if the space has a separate entrance like an annex, as that could be classed as a separate property. Number 5, add family members to your limited company. If you run a limited company, you can add your spouse or children as employees or directors, paying them a salary within their tax-free personal allowance, which as of 2024 was £12,570. And essentially this allows you to distribute income tax efficiently, instead of paying yourself a large salary and getting taxed at higher rates. Example, instead of taking £20,000 in profit and paying tax, you could pay your spouse £12,500 tax-free, which could reduce your overall tax burden. Number 6, tax-free investing. Each year you can put £20,000 into an ISA. I'm talking stocks and shares, cash, lifetime, innovative finance ISAs. And the best part of this is any gains, dividends or interest made on the ISA are completely tax-free. No income tax, no CGT. Number 7, gift aid donations to reduce your tax and support charities. Donating to a charity via gift aid increases your donation by 25%, and it allows higher tax rate payers to claim back tax relief on donations. I'll give you an example. If you donate £1,000, the charity gets £1,250, and if you pay 40% tax, you'll be able to claim back £250 in tax relief. Number 8, claim business expenses. Whether you're self-employed or in a limited company, any legitimate business expenses can be deducted from taxable profits. And common ones include home office costs, your travel expenses, training courses, equipment and software, phone and internet bills. All these things help to reduce the taxable profit, meaning less tax to pay.